Good morning. Welcome to the Brew. It's Friday, and we have Paulina with us today. Our topics: Nvidia's latest earnings call, problems for retailers in China, and why does September suck in the markets? Let's get right to it after the bell. It's that purple hazy kind of feeling. I don't know.
Well, that would match my slow camera connection here, so this is kind of perfect.
At least we're not echoing anymore. Paulina, hello.
Hi,
Hey,
guys.
Paulina.
Oh my God, we had a little technical difficulty. We're back. We're in action. It is, I don't know what Friday it is. It's just Fun Friday, right? So we're back at it after the long weekend, the Labor Day weekend. Did you put out a flag? I put out a flag, and I learned something about the American flag. Here's the deal with the American flag: when you put it out, you're supposed to light it at night if you leave it out. Did not know that.
Interesting.
What do you think?
I like that.
That's part of the protocol of displaying the American flag. Now, I never thought about that, but that's pretty cool. Anyway,
I appreciate the gesture. I think that's
Yes.
that's a nice gesture.
Yeah, I love having it out there. It's pretty cool where it is, but nevertheless, Nvidia had an earnings call.
Okay.
Right?
They sure did. Yeah.
All right. So you want to go there first, Paulina?
Sure.
Let's set it up. So it was a good earnings report. However, the stock rolled over a little bit.
It did. Yeah. And it's an interesting dynamic because what happened here was Wall Street expectations were again way too high, even though Nvidia reported record quarterly revenue of 30 billion, and it did significantly beat estimates. And this 30 billion, that was a 122% year-over-year increase. The thing was, it's clear that, Nvidia is not growing as it was 2 years ago. And it makes complete sense. If you look at any of the big tech firms like Amazon or Alphabet, the Google parent, they're not growing as fast as they were anymore 10, 15 years ago. Same concept here for Nvidia. And that's why the stock cratered a bit. On top of that, there was a little bit uncertainty around whether the company is going to be ramping up production on the Blackwell AI chip, and they did in fact get more clarity there. But it was mostly the fact that Nvidia's growth is slightly decelerating, even though it had a really, really good quarter.
Okay, but to me that seems somewhat likely to happen to any company, right?
Yeah.
Especially a company like that's just blowing it out, going crazy. It's a hockey stick sort of growth. At some point, you can't overcome the mountain of expectation, I would think, right? Is that fairly? You see that a lot in these big high flyers?
Absolutely. Yeah. So just to clarify, Nvidia's earnings, it didn't fail to meet Wall Street expectations. It met earnings and revenue expectations. But yeah, it's just about meeting Wall Street where they are in terms of where they expect these numbers to come in at. And it was a strong quarter. It just wasn't like an incredibly blowout quarter like it was a few years ago.
Yeah. So guess what, Mal?
Yeah.
I put on the Nvidia earnings play.
We did great.
I don't know if it was great.
Okay.
Yeah, I put it on. It didn't work out the day of as I had hoped. Didn't get enough movement out of it. So I let the shorts expire.
Okay.
And then I was left with the long. So I was left with a long call and a long put. And the stock continued to crater, which was good for the long put.
Right.
So I got some of the dough back, which was fortuitous, I think.
Okay.
Not part of the trading plan, ladies, but just hang with me here.
I think we've seen this before. Check out our newsletter. We've talked about CrowdStrike. They took a big dive with the short, with debacle that happened, and then we saw Kathy Woods jump in and invest at its low. So sometimes you just times to discount to jump in. But it's interesting. AI is here to stay. CPU units. There is competition. You're watching Tesla do some smaller capacity competitive chips. So and then you're seeing people build barges out into the oceans to possibly skirt some regulation. I think the biggest thing to look at is regulation and how that's going to drive progress. We've never really had a lot of cooks in the kitchen when it comes to tech, and hence its acceleration as far as government oversight. But I think everyone's across the board in agreement as far as keeping our eye on AI. Watching AI and your conscious ChatGPT, Lex Friedman and Sam Altman deciding whether it is. We like you. We're your friends. Okay. I just want to say that.
I love it. Yeah. Well, so right. AI is here to, you know why? I know it. I just put it on my phone. I put the little Chat GPT guy down there on the main page.
Right.
I find for whatever reason, the whole AI part of it, it's easy to do that Chat GPT. You get answers instantaneously. I don't get a lot of ads all over the place, at least not yet, which I love. Yeah. And it gives me good information. So I'm a fan. I'm also a fan of Nvidia too. I got to be honest. I still am.
Yeah, so when you look at ChatGPT 5 compared to ChatGPT 4, I mean, the massive expansive growth on capabilities is just mind-boggling. And so there's a great saying, and then I will be quiet for you, Paulina, but this thing's going to get so beyond us so quickly that AI will look at us as if we're trees because we are so slow.
And they're not going to think we're stupid, are they?
I would feel like it's symbiotic. I'm gonna be an optimist. So however we feel about our beloved dogs,
there's so many cool AI stories. We don't have time for it, but we'll do one of those later. I got some other thoughts on this, but let's move along. Problems for retailers in China. What's going on there? What kind of problems do we have?
So there is a lot of problems in China, particularly the continued slow recovery of the economy, weak consumers, and all of this is putting pressure on retailers in China, particularly Pinduoduo, who is the parent of Temu, and they are facing some growth challenges because of not only the weak environment that they're in, but also because of fierce competition. And as a result, we've seen shares of PDD experience the steepest drop that we've seen since 2018. And that comes after the company missed revenue estimates for the first time in 10 quarters.
Oh, wow.
So the backdrop for the Chinese economy and for the retailers doing business there is pretty tough. And I actually wrote a story on this a few months ago when Meta had reported a quarter. You might think, what does Meta have to do with Temu? Well, actually, Temu and Shein, both are Chinese retailers. They were some of the biggest advertisers, ad buyers for Meta. And that's because they're trying to expand their customer base from outside of China because the Chinese consumer just doesn't have any money to spend. So they're looking to capture some more wallet share from U.S. customers, European customers, and so forth.
Okay, is it dire?
Yeah, it's pretty challenging because right now the Chinese consumer, we're seeing this not only across Chinese retailers but also U.S. retailers that are based in China. For example, Starbucks, their coffee chain performance in the world's second largest economy, China, has been terrible. And that's because it's seen as a premium product for Chinese consumers. And as a result, consumers are going to more affordable options like Luckin Coffee and others. So kind of similar to the US consumer, Chinese consumers are looking for value. They're looking for discounts, saving money wherever they can, which is not boding well for a lot of Chinese retailers.
So is that also a function of, is there a big inflationary sort of element in China right now as well? You might have said that, but I apologize for missing it if I did. Because I don't really follow China so much, but is there an inflation part going on there like we had in this country or having?
So I would say that for China, it's more of the property sector is a huge part of the Chinese economy, and that has just fallen to the dumps.
Okay.
And I believe a lot of people's pensions in China are tied to the property sector.
Oh.
And that's a huge
Mhm.
macro issue. So I think yeah, inflation is an issue for everybody.
Mhm.
But I think for China, it's more of the property sector
Got it.
that's really
And
weighing on everyone.
yeah, and we see the Chinese government scrambling to back some of these mortgages. So I think the biggest thing to look at in China is their push for the central bank digital coin. So that is a huge, complete change of their monetary system. So let's keep an eye on that. And of course, the thing everyone's concerned about is, especially with China and the social score, is the privacy issues as far as that goes. So I think that I'm curious to see if there might be any exodus out of China to more friendly countries. So, but interesting. And
Yeah.
again, nothing about the people themselves. We're just talking about governments as far as how they operate their businesses and operations. So, yeah.
Okay, so it's not good. In other words, I was trying to get a temperature of 1 to 10 of how nasty it is.
Yeah, it's not good. And when there isn't a healthy player in this market, it provides opportunities for other retailers to come in
Sure.
and take any spot. And people are saying that Amazon has an opportunity to leverage that instability between Temu and its vendors. So it could be, we could be seeing Amazon, taking some share in that area.
Got it.
And we do have this looming commercial real estate maturity date happening, I think, especially in the U.S. But when you see a Chinese government backing developers, yet they have empty buildings, that's a whole other topic. That if the shoe drops and something large like that, as we've seen, back in the day, in 2008, it can affect retail in a really very big way as banks adjust to catch the fall. So this will be interesting.
Yeah. Okay. Well, I'm keeping my eye on that one as well, and I'm going to learn more about China. The next one, interestingly, you ready for this? These, I don't want to embarrass Paulina, but these were Paulina's words to me. Okay, you ready for this? Hold on. Wait till you see it. Stay with me. Stay with it.
Hold.
No, it's holding. Wait a minute. Here's what she said to me.
And
September is sucky. Just saying.
Is that an acronym?
I think, well, I should continue. September is sucky for stocks, and I agree with her 100%.
This is your forte.
I agree with her 100%. September is sucky. So it's interesting you brought that up, Paulina, because I was chatting with some folks the other day who are in the industry like I was, and they said the same thing. That they said, do you deal with seasonality? And I said, not really. I tend to not be very directional, in my trading and thoughts. But they're like, man, September is historically such a brutal month. What's going on? Why does this happen? Do you have any sort of rationale on this? Does it make any sense?
Yeah, I mean, September is often considered one of the worst months for a combination of different factors, but I can't say that, market historians or traders can really pinpoint exactly what the issue is, but some people point to historical trends. So, over many decades, September has just consistently been a weaker performer compared to other months, and people call this the September effect. And it's not only in the US market, but it's also, across the global markets as well. And then you also, like you mentioned, seasonal behavior. So investors, they tend to reassess their portfolios after the summer months, lead to some selling pressure. So that gives them an opportunity to lock in some gains or maybe reposition their portfolios. and that obviously contributes to some volatility and downward pressure.
Okay.
And then you have another theory is mutual fund managers and institutional investors. They kind of look at the end of September as kind of the ending of their fiscal year. So that prompts them to sell off some stocks that might be underperforming or rebalance their portfolios, again, leading to some drop in stock prices. So, and then there's like psychological factors there as well, which might, propel some people to do some selling. So those are some theoretical factors.
Got it. Okay. Molly, any thoughts on September effect? Yes. I noticed it throughout my career. I really did. I must be honest. I didn't have a good reason for it. We just played the game, right? So I don't know if you have any thoughts.
So I think of the next month is getting jealous. We should just mention that October surprise is you see some sort of events, but I which is like a thing. But Lex, I think you have so much background in this. It would be interesting to hear how you kind of handled that on the market maker side, because I'm sure it happens.
Yeah. Although Paulina has to go night. Time for Paulina to go.
Just one story. One
little story. Quick, make it quick. So we tended to deal with more of an October effect. So we had some of our biggest down months in October. Okay. Not that the whole month was a catastrophe, but you guys weren't around when the 87 crash happened. No, you weren't. You were.
I was.
So that was tragic, and that was scary, and that was in October. And then we had some other October pitfalls along the way too. But I find that the fall, once the summer's over, we tend to start getting serious about the market again. And I think people I don't know what it is about that time of year that causes that. Now, I've never leaned in that direction ever. Okay. And I've told you before, I've always been, short the market for my entire career. And you think, oh, you must have gotten killed. And I'm like, no, actually I haven't, because I was a market maker, and we got to do all that fancy stuff. So no, I would say the answer to the question is I would never position myself that way. I would just trade what the paper gave me, period. That's it.
Okay.
Paulina's got to go.
Okay. Any bad months is technically a discount month. So go shop.
Right. I feel like generally, we're in earnings season, and and I kind of mentioned it, but Wall Street is very forward looking. So by September, people are already looking into 2025. So at this point, people, for all intents and purposes, they kind of feel like 2024 is over. Mm-hmm. So they're forward looking.
Okay. That makes sense. Okay. Well, that's great. Thanks for all this, Paulina. That was wonderful. And we had the lovely Molly back today. Thank you for that.
Thank you, everyone.
Thank you. Thank you. Well, you have a good weekend, Paulina. I'm glad to see you. I think you're back in the office. It's looking like to me. Very cool.
Yeah.
Very fancy.
Is that your intern on behind you? No.
Is that your
No, I'm in a good old room, white room with
I love it.
Padded walls.
Thanks.
Perfect. All right. Well, you have a great weekend, Paulina. We'll see you next Friday. Ma, I'll talk to you later. Oh, no, I'll talk to you after we say goodbye to Paulina.
All right. Well, let's continue.
All right. Bye, Paulina.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.